and welcome to Economy and Markets TV, where we have conversations with a purpose. I'm your host, Dave Okenquist, a senior research analyst here at Dent. Joining me to take you around the world of economic and financial news and covering each topic in 2 minutes or less is the editor of Boom and Bust, Mr. Rodney Johnson. Rodney, good morning.
Morning, Dave.
Now, Rodney, you told me you are in the midst of a move, so you wanted to make it clear that you are not in a jail cell or anything because of the bare walls, right?
Exactly. There will be stuff on the walls next week, and they'll be a different color. So
yeah, great. I am so looking forward to. I want to get with your interior decorator, and we'll discuss options. Anyway, Rodney, let's move into the news of the week, and the thing that's been dominating the news has been the impeachment inquiry hearings and the theatrics surrounding that. It's really not clear what exactly is happening, but there is some increased tension and fear. That's sort of the backdrop of what's been going on. And on the market side, we have earnings season. Of course, we've got Boeing. They have their problems with the 737 MAX. I believe I read they're also going to start cutting back on the 787 production, having some trouble there. Also, yep. Caterpillar and your favorite Tesla. What did you get out of earnings season so far this week, Rodney?
Well, it's been mixed. I mean, Tesla came out with a surprise profit, and they were rewarded for it. Amazon came out with a much lower profit than anticipated, and they got smacked down 6%. It looks like people are looking for profits, and that's a good thing, right? People are moving away from the kind of ethereal story of what things are going to be and saying, I hear it, but I want to know what you are today. I want numbers today. And I think that's a good move. I think that's a trend that we're going to see pick up here, particularly as we get further into the fourth quarter and into 2020, as people look around the world at lower growth and go, you know what? I'm going to pay for real money coming across. I want to see real revenue and real earnings.
Absolutely. Now, besides that, it was sort of a quiet week release-wise, but we did get some stuff on housing. We had new and existing home sales. Yep. On the new home sales front, it fell 0.7% in September. And we have shrinking inventory. It's historically low. It's at 5.5 months. I actually looked this up before the show. The historic average since 1963 is 6.1, so a little bit below there. Yep. On the existing home sales side, down 2.2%, although up for the year. But interesting thing here, and a trend that we've talked about, price is up nearly 6% for the year. And there on the existing home sales side, inventory is just 4.1 months worth of supply. Just not enough there for buyers, is it, Rodney?
It's not. And after some pretty good numbers that we had seen in August, people were looking for September to be a nice bounce back, and it didn't really show. And so you had the real estate industry perhaps looking for this late season boost that was going to move us into, the next level of sales. It's not happening. We're dropping back again. And it's what you said. There's just not a lot of inventory out there. I believe new home sales prices actually came down some, and that was a good move because it shows that they're selling a little bit more at the lower end of the market, but not nearly enough inventories coming onto the market to bring those first-time home buyers in, which are the ones who want to buy a house. I mean, I'm selling a home, buying a home this weekend as we do all this, but I don't really count because I already have one. We need new home people, new people moving from rentals to buyers. Those are the ones that we need to enter the market, and there's just not enough inventory for them to do that.
Yeah, but that is also regional, right? As you say, it just depends your location. Some spots where there's plenty of land, there is some building. I mean, I remember just even last year when we were at our Irrational Economics Summit conference just outside Austin, it looked like the whole thing was booming.
Well, it's not that there isn't any. I mean, we just talked about, hundreds of thousands of units. I believe that the pace now is like 708,000 units a year. And so those almost 750,000 new homes are going up somewhere. But looking at the number of millennials that are renting that want to be in the home ownership market, we just have a mismatch. And so what we've seen, of course, are prices move to a place where they're now plateauing, but they're plateauing quite high, and millennials just can't get there, and yet builders can't build down to them because of the cost of land and materials and labors and everything else, So we have kind of this mismatch in the market, and we're no closer to solving it yet.
I'm just going to hang here just for a second on this again because I have another follow-up. Could we see somebody step in from the government, a Trump or a Warren or a Biden, come up with some kind of a plan to incentivize on the buy or the sell side to either build more homes or to provide more maybe buying relief for first-time buyers?
Well, I'd say that we already have it. People may not realize it, but you look at what happened during the housing crisis, and we had people buying homes with ninja loans, no job, no income, no assets. We had Alt-A loans. We had very questionable underwriting. Well, the government kind of subsidized, if you want to call it that, lending program in Fannie Mae and Freddie Mac. They have loans where you can put down just 3%. 3%. And so that's a long way from the 20% that we consider as conventional, and yet it's still not getting the trick done. And so it's just an affordability issue. To solve it, you're seeing some towns or larger cities go to multifamily zoning in what were single-family zoned neighborhoods. They're allowing people to come back and put a duplex or a triplex on what was once, just single-family dwelling. Well, they're getting pushback from their neighbors who say, wait a second, this is not what I signed up for. It's not what we've been. And so, yeah, you've got this real back and forth going on, and you would have to do something about the costs, and I don't know really how you do that. If we keep funneling money to the buy side of this, we're going to end up with the student loan situation where the cost side keeps spiraling because we keep giving some incentive to the buy side, which does nothing to, equalize the market.
Excellent, Rodney. Now, we took up the time of just about 2 topics here, so I'm going to hit that bell. I want to get to something that I didn't want to talk about last week, and you did, which is Brexit. And I think I was proven right here that all I see is lots of votes, nothing happening. So, Rodney, what's going on this week in the world of Brexit?
There was some movement. I mean, we've seen the Brits throw the Northern Irelanders under the bus, the Unionists. Those are the people that live in the country of Northern Ireland, who, which, by the way, is part of the UK. It's part of the empire. They are connected, of course, to Ireland, and they have a land border. It's the only land border between something in the UK and the EU. It's right there between Northern Ireland and Ireland. And so everybody in Parliament had said, no, we can't have any thing that basically pushes Northern Ireland more toward the EU than keeps them more toward the UK. And that's exactly what they've ended up with. The agreement that Boris Johnson struck with the EU, that then Parliament actually voted, yes, we accept this in principle last week, says, look, we're going to consider Northern Ireland part of the EU for trade, but when goods come from Northern Ireland to Britain proper, then we're going to have to do something for customs. And of course, the people in Northern Ireland are very upset about this. The big deal, though, beyond that, is that they've agreed in principle to this now, but they haven't agreed to details. And so they're going to take this extension into the end of January to take time to look it over. Could they still introduce amendments or something that blow all this apart? Yes, they could, but they're moving this direction. They are really moving toward Brexit, which it's going to be a beginning, not an end. Once they do it, it basically says, yes, these are the principles by which we're going to disengage, but it gives them a couple of years to do it, so they'll continue kind of like they have before for at least another 2-3 years.
Okay, so you're seeing some real progress here, even if these votes.
It's like ice melting, right? It doesn't look like much, but at the end of the day, you got a puddle instead of a cube. It does happen.
Great. Well, I'm hoping that ice melts so we can just put this topic to bed. That's really all we had this week. Looking ahead to next week, it's going to be a bigger week. We're going to get the U.S. Home Price Index report, but even bigger than that, we're going to have the Fed meeting and the employment report coming out on Friday. Rodney, it seems pretty clear. At least I think the betting markets are about 95% that we're going to get a 1/4 point cut. You on the same page there?
Yeah, it seems pretty obvious that we're going to get a rate cut here, and then they'll probably make some noise about, hey, this is it for a while. We're going to sit around and be data dependent after this. But they're chasing the rates around the world lower, trying to keep the dollar from screaming even higher, which is the big issue. And then with slowdown in trade, you want to make your goods as competitive as possible, so you can't have the currency this high. I think we got a couple things going on. The employment report at the end of the week is going to disappoint because we just don't have that many people looking for jobs. Okay. It won't be that big of an indicator for the economy. The bigger thing really is the impeachment movement, because as investors and people involved in the markets, the financial markets, we have to make as good of an estimate as we can of where things are headed. And if the impeachment movement kind of grows, and we're now at about 50% of the nation saying, hey, I'm in favor of this, you have to start looking and saying, well, what does this mean for the elections? And it could mean, of course, that you get a Warren presidency or a Sanders presidency. Yeah, and those things are going to be very different for the financial markets and for the economy. And people have to start preparing for this, or at least laying out what they would do as this becomes an eventuality, if of course it happens. And it's not going to be as friendly. I mean, you're going to have higher taxes. You're going to have more regulation. You're going to have more involvement from the worker side on corporate boards. Just a bunch of things that are going to slow down the workings of corporations, and people have to prepare for it.
Well, it's worth it if we can get the mean orange man out of the office, right?
I'm not going there. You did that, not me.
Okay. Rodney, thanks so much for your insight. I hope your move goes well. Like, again, I can't wait to see what your digs are going to be like next week. Thank you all for watching. If you've got a question or a comment, send those to tv@economyandmarkets.com. For Rodney Johnson, I'm Dave Okenquist, and this has been Economy and Markets TV.